Hello, guys, and welcome to another post-market analysis of Bank Nifty. Today is November 8th, and today is also a weekly expiry since it's Wednesday today. Today is Bank Nifty's expiry. So, this is the price action of Bank Nifty in 5 minutes time frame. But as usual, let's start from the daily time frame. All right, so here is the daily time frame of Bank Nifty. The last red candle that you see here is a candle that is representing today's price action. But before that, from last many days, we have been continuously talking about this double top pattern that has formed on a Bank Nifty in a daily time frame, and we have been talking about this major trend. So in the Bank Nifty, from last till last week, we have seen a major downtrend, and this particular moment that you are seeing in from the last couple of days is a counter move to this major downtrend. So I still believe that the trend of the Bank Nifty is still towards the downside, but we should let's see how the prices have done today, whether it has created any change in momentum. Okay, so now this is the support area from the daily chart, and we have a double top formation there. We have clearly seen a breakout on October 23rd. From then, we have seen a rapid momentum towards the downside of the Bank Nifty, but then we have started to see a counter move which is rising towards the support area again. This is expected, and that is what we have been talking in the last week. So this is a still counter move. Don't come to a conclusion that this is an uptrend until you see a close above this level. Above this level, we can say that it is an uptrend, and until you see a breakdown after below this swing low, you cannot assume, I mean, you cannot come to a conclusion that it is in a downtrend. But according to me, this major trend still on a daily time frame is looking towards the downside, and the momentum that we are seeing here, I still take it as a counter move. So, and the prices are at very important level, that is at this support level. So yesterday we have seen a bullish close on a daily time frame, but today it is a bearish close, which has opened into the support area, and we have seen a close. I mean, we can clearly see that prices have failed to go beyond this level. So, but before that, for the straight continuous 4 days, we have seen a doji formation on a daily time frame, which is very rare to see a continuous four dojis like this. So, market, even though despite of having higher lows and higher closes, here we have a uh, solid candles only in the last 2 days. Yesterday was a bullish candle, and today is a bearish candle in spite of a gap up opening. So this tells us the market trend has changed for today. But again, it's better to wait for one more day and see another confirmation candle below this. But as far as our candlestick pattern concerns, this is a perfect dark cloud cover pattern that we are seeing at a main resistance area. So this was support area before, and now when the prices are coming from the bottom, this becomes our resistance area, right? So those who don't know what a dark cloud cover pattern is, we have it very clearly explained, and when to use it with and when will the dark cloud cover be the most important, when can it become a most important reversal signal. We have discussed all of this in our candlestick pattern series. So I'll either leave a video towards the end of this video so that you can go there and watch. So enough with our daily charts. Now let's go back to our intraday time frame, that is 5 minutes, and then see what can be done from today's price action. All right. So all right. So this is the price action of the Bank Nifty for today on a 5 minute time frame, and then okay, for our convenience, I'm just taking out all this support areas, or you can retain this green support resistance area that we have achieved from a daily time frame. So prices have opened well within this area, and we have seen a breakout of the prices coming out of this on a 5 minute time frame. How do you know that this is a proper breakout? Just you just have to wait for the second candle's closure. Whereas in this case, the second candle, the 920 candle, has seen. See, we are talking about this. We have seen a positive breakout towards the downside, but can you take a put trade there? Definitely not, because your risk versus reward ratio is way too far, because your risk on the upper side is well beyond this level. So that is way too far. So the better thing that you would have done is just wait for the intraday support and resistance levels to form. That is to give market time, Bank Nifty a time until it forms a swing low and swing high. So here, this is the point where we have seen a very study. Okay, excuse me with the chat. Okay, we just skipped from our Bank Nifty and launched into Bitcoin. That's my mistake. Okay, all right. Yeah. So this is we are back into the Bank Nifty chart again. So this is the place where we have seen a bearish engulfing, bullish engulfing pattern, and we have also discussed about engulfing patterns very uh, in detail in our candlestick pattern series. So you can go and watch that. So whenever we see a bullish engulfing pattern or a bearish engulfing pattern after a significant move prior that candle formation, then it can be taken as a proper support or resistance depending upon whether it is coming after a downtrend or an uptrend. So in this case, we have seen a swing low here. Also, we have seen a couple of candles getting rejected from the same area, so that it is safe when the market is here, when the market is trading there. You can clearly assume that this is your support level. So that is why we have marked this location. And here, when you are here, you have also seen prices have sharply gone down from there, and this is also a version of engulfing pattern, but let's not consider it as an engulfing pattern because you don't have enough momentum before it. So in order to understand all these rules of engulfing pattern, I request you to go to the engulfing video and see those videos after you finish that. So but and in any case, we have a swing high and a swing low for intraday at by 10:05. So at 10:05, we are able to plot these two areas of resistance and support area, and this is where we have seen a breakout at 10:05. So how do you know whether it is a proper breakout of? See, first of all, this is a very large candle of 110 points in one single candle. Okay, so how do you know whether it is a true breakout or not? It's very simple, just to wait for the next candle. So the next candle is also a bearish candle which has seen a close below this. So yes, it is a proper breakout, but can you take a put trade here? Definitely not, because of your risk versus reward ratio. So if you are entering there, your immediate target would be this, because from yesterday this is the place where you have seen a very sharp move. So that would be your first target. So and your stop loss would be above this candle. You see, your risk versus reward ratio is not even one. So that's not a proper trade to take. After that, we have seen a candle again coming back, breaking this support level and closing above it, but again failed to see a follow through candle of that. And again, it has come down, and we have seen a confirmation candle, but we have the same reason not to enter into this trade, because we don't have proper risk versus reward ratio. See, by now here again you have seen a breakout towards the top, and again we have seen a failure of that. In such scenarios, what should you do when your support zone is getting whipsawed continuously from up and down for multiple times? It will lose its strength to hold the whole prices, whether it is coming from the top or from the bottom. So we would take that off and wait for a price action to take place. So since this is holding well from yesterday, I would recommend we would have now modified our support area to that level. Okay, and now if you notice, this particular formation right here is not only a morning star. See, this three candles, this red candle and this doji spinning top, it can be a doji or a spinning top, and this green candle, all put together, it is giving you a morning star pattern there, which is a reversal pattern from the bottom, which is a bullish reversal pattern after a downtrend. And you have a second reason, that is this two candles put together is an engulfing pattern. Okay, let's quickly write those down. One thing is we have a morning star. So that's our first reason, first reversal signal, and then we also have an engulfing that is bullish here. This is bullish engulfing, and we have a third reason, which is because all these patterns are coming at an important location, which is a key support area from yesterday. So this is your support area. So now we have three reasons at this 11:20 candle. You have three reasons to enter. One is you have two reversal patterns happening, and also you have seen a failed breakout. You see, this spinning top has tried has it has tried to close down, but it is also a failure. You didn't see any proper follow through after that, so it can also become another reason. You have seen a failed breakout towards the bottom. So you have four reasons here, and also your risk versus reward ratio. If you have to if you have to pick a call there, if you take a long position there, where is your next hurdle? When if you look towards left, that is your next hurdle. Okay, and where is your risk? Your risk would have been there. Now you see your risk versus reward ratio is 1.5. So you have a proper risk versus reward ratio, including risk versus reward ratio. You have five reasons to enter. One is support area, the location. Second one is your morning star. Third one is your bullish engulfing pattern, and fourth one is your failed breakout. Okay, so just write breakout failure. So including risk versus reward ratio, we have five reasons to enter into a trade, and let's assume that you would have taken a trade there, and that's your first target. Okay, so now you see market has taken from 120, so it has taken 2 hours to reach your target, but still it doesn't matter. It's okay to wait instead of hurrying up things here. So now you have achieved your target in 2 hours, and you have made around 72 points in bank nifty, which is pretty much a decent number, if not so great. And once you reach your first target on your prices, we always say that you get your cost from cost to cost. You raise your stop loss. So in this case, at 1:20 p.m., you would have raised your stop loss. So now you know that you cannot make a loss no matter what happens, and you can keep trailing your target. So it has also reached your second target at around 1:55 p.m. So after that, again, you see this is a reaction high, right? That you have seen a certain reaction high. So if you would have drawn another resistance area where you have an inside candle formation, and where your this line can be your target. Please don't get confused. I know this is going very detailed, but it's worth learning all this stuff, because here you see, if you want to go for a short trade there, okay, first of all, your risk versus reward ratio is giving you a positive confirmation, because that becomes your risk, and this becomes your profit. Here your risk versus reward ratio is 1.35 times, which is great. And you have three reasons here. One is your this is harami candle pattern, and the second reason is your location. It is coming at your intraday resistance area, and your third reason is your risk versus reward ratio. So even in this case, you have seen a profit of 31 points. So 70 points earlier, and now 100 that 30 points now, both together, you would have picked say 100 points in bank nifty till now. Let's see what has happened after that. After that, around see, I've drawn I did nothing but extended the support area which you already have on your bank nifty chart. So if you notice here, you have seen a couple of confusion again. You don't see we didn't see any proper breakout from your support area. Instead, you are seeing a bullish engulfing pattern right there. In this case, if you have to take a, you see, we have good reasons here. We have a bullish engulfing pattern happening there, and we have a location which is second. And your now there is only one left, that is you should look for your risk versus reward ratio. So in this case, your risk would be, I know, this much, and your profit would be this much. That can be your probably first target. And yes, you have a proper risk versus reward ratio of 1.3, which means you can pretty much get into this trade, even though your risk is little high here than your previous trades. But it's okay, because you have already made 100 points of profit in bank nifty. So it's okay to risk that much of the amount, at least if not from your personal account. So in this case, we have again seen a profit of 68 points. So that's it. So it was a good all these so we had trades. Now we would have traded three trades, one on one towards the call, one towards two towards the put, right? If I'm not wrong, yeah. So all this put together, you have seen a good 160 points in Bank Nifty. So that's it. It's not rocket science. If you keep on watching our post market analysis video, I'm just taking all these videos off. Okay, I mean, sorry, drawings off. Okay, so this is what we do in our post market analysis video. We dissect the Bank Nifty's price action for that particular day and see what can we learn out of that particular day's price action in Bank Nifty, especially on a 5 minute time frame. Why 5 minutes is because that is what most of the people uh, follow on an intraday level. I hope you have learned something from today's post market analysis, and I kindly request you to subscribe to our channel if you want to see more such valuable content and learn technical analysis in stock markets in a much meaningful way. Thank you so much.